Hey guys, welcome back. So, Bill Gates is one of the richest people on the planet, with a net worth of around $133 billion. He's had a lifetime being surrounded by the world's most smartest people, and with Warren Buffett being one of your best friends, he clearly knows a thing or two about business and investing. Just a quick side note, I have noticed that there are some people that do have issues with some of the things that Bill Gates may or may not have done around the world. So what I would like to do is take the politics and just move it to one side and focus solely on his investment portfolio. And this way we can try and see what we can learn and all become better investors for it. So in this video, we're going to take a look at the Bill Gates portfolio for 2021. More specifically, this is the Bill and Melinda Gates Foundation portfolio. What I can say is that there has been a very surprising update to his tech stocks, which I'll show you in a second. Just bear in mind, this is just US stock positions only. We don't get access to things like bonds or his cash positions or property or gold, so just bear that in mind. As always, if you do find anything useful in the video, be sure to drop a like. That would be very much appreciated. Okay, sit back and relax, guys. Here is the Bill and Melinda Gates stock portfolio for 2021. Okay, so here is what we've got coming up. We're first going to jump straight in and take a look at the Bill and Melinda Gates Foundation portfolio for 2021. We'll then take a look at the most recent changes, and oftentimes this is even more important as you get to see what he's doing with his money. I do have some performance data on the portfolio which I can share, and then we'll finish with a bonus clip of Bill Gates explaining a little bit about this portfolio strategy. Okay, so drum roll please, here it is, the Bill and Melinda Gates portfolio for 2021. Okay, so this is a $22 billion portfolio and it's made up of 21 different positions. The biggest slice, 44%, you can see is Berkshire Hathaway. So this is a company of companies. So this is even more diversified than it looks. I'll just run through the top 10. So we have 10% in Waste Management, 9% in Caterpillar, 8% in the Canadian National Railway, 7% in Walmart, 4% in Ecolab, 4% in Crown Castle International, 4% in FedEx, 3% United Parcel Service, and the top 10 actually makes up 96% of the portfolio. So a nice and easy portfolio to manage. And one thing that really jumped out to me was the fact that he's friends with Warren Buffett, and I recently did the Warren Buffett portfolio. So just take a mental picture of how this looks, this 44%, this 10, this 9, this 8. Just take a look at these 5 positions, and when I move over to Warren Buffett's portfolio, look at the same pattern. It's very, very similar, even though Warren Buffett's is made up of nearly 50 positions. So you can see he's clearly emulating Warren Buffett. And I would say as well, it's a very diversified portfolio. He's got many different kinds of companies in all different kinds of industries. I actually quite like this portfolio. It's very simple, very diversified, and very easy to manage. Now, right at the last minute, just before I hit record, I was preparing the bonus clip at the end, and Bill Gates did allude to the fact that he only has 60% in stocks. So this means the actual portfolio looks like this. So I've readjusted it, and it's now 37 billion, and the largest slice is actually unknown. But this is closer to what the actual portfolio would look like. And again, this is very similar to Berkshire Hathaway. So I would assume that this is going to be cash and cash equivalents. And I know Warren Buffett keeps it in T-bills, short-term treasuries. And this does change the whole dynamic of the portfolio, because with stocks at all-time highs, these guys are keeping a very big cash position. Success is a lousy teacher. It seduces smart people into thinking they can't lose. Okay, so moving on to the most recent changes. And like I said, this is often more important than anything else, because you get to see what he's doing with his money. Where is he putting money into? Where is he pulling money out of? What has he been buying? What opportunities does he seize? And which ones is he closing for good? First up, the positions that he's closed. And this is the list. So surprising for me was seeing Alibaba Group, as this is a bit of a top pick by many experts. We have Boston Properties, which was a REIT, and also Uber. Next up, positions that he has increased, and it was just one, it was Schrödinger, and he's bumped up this position by 40%. Next, things he's pulled money out of, so quite a big reduction in his number one spot of Berkshire Hathaway, Canadian National Railway, bit of a non-point, very small, but this is one of the biggest things that jumped out to me, a 50% reduction in his tech stocks. So 50% off Apple, Amazon, and Google. And obviously this is Bill Gates of Microsoft. So if anyone knows the tech industry, it's going to be him. And these 50% reductions, I'd love to know what he has seen. And then a 27% reduction from Liberty Lilac. And the new positions, what has he been buying? Nothing. Bill Gates hasn't bought anything new. So you can see the summary is that he's doing a lot more selling right now than he is buying. If you are born poor, it's not your mistake. But if you die poor, it is your mistake. And we do have some performance data on this portfolio, which I can show you guys. First up is the quarterly performance. So this portfolio gets updated every quarter, and this is going back a couple of years to Q4 2018. So what does this say to me? It's, well, relatively flat for a year. Obviously, we had the drop for the pandemic, bit of a slow recovery, but it has since recovered and now setting all-time highs, but not huge performance for a couple of years. And then performance against the S&P 500. We've got the 1 year, 3 year, and 5 year. This bottom purple line is the S&P 500. Top line is Bill Gates. So for a 1 year period, he is beginning to pull away, and it's a 36.8% versus 28%. So a good 1 year performance. 3 year performance, again, Bill Gates 44.6 versus 41, even though the S&P did do better during the pandemic. And 5 year performance, he's still ahead. So Bill Gates 110% versus 96. So he is beating the S&P 500, but I wouldn't say by a great margin. Life isn't fair. Get used to it. And let's finish with a bonus clip from Bill Gates as he explains a little bit more about his portfolio strategy.
No one would accuse you and Melinda of not giving away enough money. But one of the reasons you've been able to be so generous is by investing well. And I wonder, at this stage of the game, are you and Melinda and your investment chief, Michael Larson, as focused as you have been on generating returns so that the foundation has more money to give away, and for that matter, your private investments, or is now a time to think more about capital preservation?
Well, I'm bullish on the U.S. businesses and global businesses. So we're not in some defensive posture where we're mostly in cash or anything like that. The strategy that's been used on the investments is to be over 60% in equities, and
that's still the case?
No, that's still the case, and
even after a 10-year bull run?
Well, yeah, you can. Well, calling market turns is a very tough thing to do. You can make the case that the yields aren't very high, but that's true across all asset classes. I mean, T-bills at 10-year, well less than 2%. So there's no, obvious thing to beat other investors out there, and there's reasons to think absolute returns for the next decade will be less than they have been for the last several decades.
So, a couple of great insights in that interview. He said the strategy is to be 60% in stocks, and he didn't seem too bullish on bonds, and he said with no other obvious places to invest, that means there is 40% still to be accounted for. My best guess is that he would copy Warren Buffett and keep this in short-term treasuries, T-bills. My best guess is that he would copy his friend Warren Buffett and probably keep these in short-term treasuries, T-bills. He said that he does expect real returns to be lower in the next decade compared to the previous decades. And other key takeaways from the actual portfolio for me were, the portfolio is outperforming the S&P 500, but not by a huge margin. It was the 50% reduction in Apple, Amazon, and Google that was the most noteworthy for me. And obviously being a tech giant, it really makes me think, what does he know about tech stocks? And also, quite surprising, was closing out Alibaba Group, which is actually a top pick by many experts, including Ray Dalio. So there you are, guys. I hope you found this useful. In fact, just one favor to ask. If you did find anything useful in the video, be sure to drop a like. That would be very much appreciated. If you haven't yet subscribed to the channel, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.